Bitcoin and gold are two strategic monetary assets shaping the future financial reset taking place in the global economy. This channel focuses on covering Bitcoin (BTC) technical analysis, gold (XAU) technical analysis, and how institutional capital flows between these two assets. We always start our gold daily technical analysis with a BCG simplified market structure dashboard to give us a snapshot of the current gold price action. The dashboard looks at three core areas: price movement and price zones, trend and swing direction, and current volatility. The dashboard tells us gold remains structurally bullish, although we are seeing a pattern of lower highs and lower lows on the daily time frame. In the context of the higher time frame, we are in an uptrend, but on lower time frames, we could be definitely seeing selling, and we may be at the early stages of a correction. We always give you just three numbers to focus on, which every serious investor or trader should know on gold. If you take nothing else away from this video, these three numbers define the current gold structure. Here are the numbers: $5,700 resistance level, $5,000 equilibrium level, $4,400 support level. In today's analysis, we cover what is current price action telling us, which price level are institutions defending, which price levels could change structure. Welcome back. We are Bitcoin Capital Gold. A global financial reset is quietly unfolding, with governments and major institutions positioning for a future where Bitcoin and gold form the foundation of the next monetary system, replacing our broken global fiat system. This channel's only focus is just these two assets, Bitcoin and gold, using structured technical analysis to understand market structure and researching how capital rotates between these two strategic assets. If you want to stay ahead of this far-reaching monetary shift, this channel is designed to help you understand this move early. Let's get into the details. Since late 2024, gold is in a strong uptrend, and there is every indication it has even higher to go with the current geopolitical tensions. Since December 2015 on the yearly chart, it is showing a strong uptrend and gathering momentum. Monthly trend is up since the last low in November 2024, and 2025 was a bullish year. The weekly trend we also see is up. On all time frames, the trend and swing direction is up. However, markets don't go straight up, and sooner or later such a strong trend must have some type of correction. What has changed over the last 2 weeks is we are seeing sell orders coming through, creating a downtrend shown by the daily swing chart. This week, we have had 3 down days, and if we include today's Thursday unfinished close, the week has been bearish. Lower highs were made on the 10th March at $5,249 and 17th March at $5,049. Lower lows were made on 16th March at $5,005, and today, 19th, is still to close, but has printed a low at $4,505. Today, 19th, has seen some heavy selling before the New York session has even started. The daily chart is our first signal that we could be entering a correction phase after this strong run-up. To fully understand this daily swing downtrend, we must place it in the context of the weekly swing structure. Gold structure is defined by a structural high at 29th January at $5,627, followed by 2 days of sustained selling, culminating in the 2nd February 2026 structural low at $4,423. We are classifying this as a dominant range because ever since making this large swing range, all price action, to date, has been contained within these 3 bars, from 29th January high to 2nd February low. As long as price remains within the dominant range, this daily swing may be down, but it is still working within the weekly structure, which for now remains up. Over the last few days, buyers have been forced to give back all their swing gains. Since the 2nd February swing low, buyers made successive higher swing lows on 6th March, 17th March, and 3rd March, and higher swing highs on 11th February and 2nd March. All was looking good for a return to the dominant range swing high of 29th January. When we broke the low of 16th March, this dream was shattered. This was followed by a shallow high on 17th March. We are witnessing a change in swing character on the daily time frame. Yesterday and today, sellers have taken control. They have not only recovered lost ground, but we now see follow-through as prices, at the time of writing, fall to a low of $4,505. Again, a reminder, this is all within the structural high and low of the dominant range, and until either the high or low is challenged, the price action is contained. We will now apply Fibonacci analysis to determine price levels. On the upside, our Fibonacci resistance zone sits between $5,368 to $5,385. We saw this zone pierced by the high on 2nd March with a high of $5,434, but it closed the day underneath it. It has not been able to make another assault of this higher resistance since. The equilibrium level sits at the psychological round number of $5,000. For 10 days from 3rd March to 13th March, $5,000 was held, that is, until yesterday, 13th March, when the first cracks appeared. 17th saw a feeble attempt to pull back, but by 18th we saw selling. As we write this, just on the New York session open on the 19th March, sellers are stamping their authority. Downside pressure has been firmly established by both the Asian and London sessions. Can New York recover, or will we see a deeper follow-through on the downside? Our Fibonacci support sits between $4,209 to $4,229. This zone is below the structural low of $4,423 of the dominant range, so clearly the structural low needs to break for price to test this Fibonacci support zone. We hope that has given you a clear picture of the current price levels gold is working within. Turning our attention to volatility, we use volatility to ascertain direction and magnitude. We ask the questions, are ranges getting bigger and in what direction? First, we look at ranges. The ranges aren't telling a great deal at the moment, other than the weekly they are rising, possibly as volatility starts to creep up. The monthly so far is a mixed range. For gold, the monthly close to open is giving us more information. Week 7, 8, and 9, we had 3 small up weeks with close up $42.70, $32.90, and $159.80, all small ranges. However, from week 10 and now we are in week 12, we see the ranges increasing to -197 and -319 respectively, telling us that buyers are starting to take charge. Volatility gives us early market signals before major moves. So the market is on an uptrend, but a lower time frame bias indicates we are correcting. The weekly defined structure for now is still holding, so we have no low time frame moves to negate this argument. With the structure and key levels now defined, the market can realistically unfold from here in 3 different ways. Scenario 1. Buyers flip the down move. Buyers flip the short-term selling in line with the higher time frame. To do this, they must at least close above the equilibrium price level of $5,000. We are nearly $1,000 below this currently. The New York Open may have something to say about this. Scenario 2, range continuation. For 10 days, the equilibrium point was held, but the last 2 days have seen selling. If neither buyers nor sellers take charge, we could see prices drift back towards their midpoint. Scenario 3, support failure. As we look at the charts, sellers have put the gas on the pedal on a daily basis, driving the prices down. They are refusing to let prices return to the $5,000 balance point and appear to want to test the structural low of $4,423, which it is close to doing. As the market remains in the dominant range, we will stay neutral until we are able to challenge either the structural high or the structural low. Before we finish, let's simplify everything into the 3 numbers that matter most right now. If you remember only 3 numbers from this entire analysis, remember these: $5,700 resistance level, $5,000 equilibrium level, $4,400 support level. In today's analysis, we cover gold has an upside bias. So the structure is actually quite simple. We need to follow through to channel low at $4,400. The daily swing is down, which is contrary to high time frames, but it may be the start of some kind of correction. Until we can push up to at least the equilibrium level of $5,000, the line of least resistance on the lower time frame is down. We are now on the penultimate day of the week, so today's close could be a pivot point. Friday will be the end of the week, and a close on the low doesn't bode well for the bulls. From a BCG market structure perspective, the key elements remain unchanged. The swing remains bullish, key price levels on the upside are being tested, and volatility continues to compress. And that's your BCG simplified market structure view of gold. Every day we publish a simplified market structure briefing on both gold and Bitcoin. Gold and Bitcoin are not competing assets, they are strategic levers responding to different financial conditions. Gold is asserting itself as the defining store of wealth of our era, reaching all-time highs against a backdrop of war, inflation, and institutional demand. Bitcoin is simultaneously rewriting its own narrative, no longer simply a speculative asset, but one that serious portfolio managers are beginning to position alongside gold. Understanding how these two assets interact is no longer optional. This channel is built to help you think through that decision with structure and discipline. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. At the heart of the new global financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.